All right, so I want to continue this discussion of autonomous vehicles. Um, Again, if you're doing this as your paper too, it's a great topic. You do need to find your own articles. In fact, I'm hoping you'll find some really good articles. The ones I'm showing are a little dated. We've had some new things happen in the last few years, which would probably impact what these articles are talking about. But this paragraph talks about what I was talking about is um, the impact on productivity. You have a car that picks you up every day on the way, you're listening to music, you're watching TV, you might be in a meeting at work. Um, so essentially it adds whatever time commute time is, that becomes productive time, hopefully. Maybe we're not watching TV or playing games, but doing actual work things. Um, so even if there is some kind of stop in the traffic, um, you're still okay because you're working, you're productive, you're not just sitting there staring. So it's interesting. You get better wireless connections. Obviously, you wouldn't want to do that now because you don't want to encourage people to be distracted while they're driving. But our connectivity in the cars will become stronger. We talk about cars being connected. I'm not sure the insurance industry has really thought through what this means for safety. It certainly helps with productivity and cars that are avoiding each other because there's maybe traffic issues and they can talk to each other. Um, and then what new businesses are going to be developed because of this industry? So mobile networks to a car that are part of the car are devices that carried by the driver or passengers connected to the car. The most obvious example are infotainment systems, music, satellite navigation, traffic information. Um, there may be warnings that part needs to be replaced, um, communicating cars with each other, roadside sensors, traffic signals. I mean, just think about it from the standpoint of energy use. If your car knows that the light is going to turn green in 34 seconds and the speed you're driving is going to get you there in 10 seconds, then the car will simply reduce speed, save gasoline. So this has big implications, obviously, for the property casualty insurance industry, also for the energy industry. It makes electric cars much more likely. Banks, car loans, the impact on industry is going to be huge. So the key here is industries may be destroyed by autonomous vehicles, but you may create whole new industries in the process. Um, So the American National Highway Traffic Safety Administration said it would begin working on a regulation to require vehicle-to-vehicle communication to be fitted in all new cars. So, we're already talking about this, and we're already seeing a little bit of this, but just how much more advanced will this get? And the key is with artificial intelligence, machine learning, and other things, we're just scratching the surface. What things will look like in 10, 15 years, we couldn't even imagine it today. It's going to be pretty amazing. Um, so changing time, traffic lights, as we talked about, or we might even do away with traffic lights altogether. Instead of cars stopping at a light, they simply pace themselves such that traffic just continuously flows. No stop signs, no red lights. Everything's so coordinated. You just keep driving and driving. So who's gonna do this? You have traditional car makers, and they're developing these type of vehicles. But what are the businesses that actually can create this? Why are Google and Apple and Alphabet, Google and Amazon, these other industries so interested in autonomous vehicles? And it's because they're seeing opportunities to essentially make more business. And just think about it from Google's standpoint, or Facebook, or some of these other businesses. You have another extra hour that you were driving, but now you're sitting and you're searching the net or you're on Facebook. It's tremendous for them. We might create car sharing, either through clubs, rental firms, peer-to-peer services. Making journeys using several forms of transport, including a car, would be smoother if it's easier to find a car sharing location. What will this do? The rental car companies, will it put them completely out of business? I've stopped renting cars when I travel and have been using rideshare. It's just much more convenient. It's actually less time consuming because a rideshare shows up a lot faster than it takes to do all the paperwork for renting a car. So you convert that to autonomous vehicle, and it just gets even more user friendly. So this next article, car makers increasingly fret that the industry is on the brink of huge disruption. Incumbent manufacturers are recognizing the double threat posed for technology as car sharing takes off and driverless vehicles come closer. Some people who might have wanted to own a car may no longer do so. Might otherwise have expected from the rising middle class in developing countries. So instead of, as China and other developing countries become wealthier, they essentially skip the whole technology of buying a car and having your own car. Ride sharing essentially fills in that gap. Technology firms may be better placed than car makers to develop and profit from software. So and I heard one presentation I thought was really interesting. I can't remember if it was it might have been a podcast, but saying going forward, every great company will be a technology company. It's all about software. The hardware, the car itself, those type of things, we don't care about anymore. It's not the house, it's not the car, it's the technology, it's the software. It's not even the phone, it's the applications on the phone. So the world is changing, and you're seeing more and more of the sharing of cars. All right, we're going to talk through that. Taxi services such as Uber and others, which are often cheaper and more efficient than conventional cabs, are also growing quickly. Once they're able to dispense with drivers, business will be in effect emerge into one big, convenient, and affordable alternative to owning a car. I do have in my business finance classes and my executive MBA classes, they have to do a cost-benefit analysis. And one of the things I encourage them to do is looking at the data we have today, does it make economic sense for someone to buy a car? Is the net present value of ride sharing better than the net present value of owning a car? So far, it's not true because Uber and Lyft are much more expensive than car ownership. But there are places in the world, in the United States, where Uber is advertising that Uber be your second car. So if you have a car and it's only used to drive someone to work, then the math starts getting interesting, and using Uber instead of buying that second car, you have a family car and you have a car that just goes to work, using Uber as that second car, the math is starting to work so that actually is a positive net present value decision. So when is this all going to happen? You can read through some of these quotes. You say by 2020, obviously we're going to miss that. So someone says add 5 more years. We talked about the S-curve in one of my classes. In the S-curve, what we talked about in my risk management class, the S-curve is, it seems flat or almost no growth, nothing's happening, and then suddenly you hit some inflection point and it just takes off. And I really think that's what's going to happen with autonomous vehicles. Barclays says fully driverless vehicles will result in the average household cutting its car ownership from 2 cars to 1 car. So just that by itself, if you're doing the auto insurance industry, if people own 0.9 fewer cars, that's a huge impact on their revenue. You've got to get the regulators on board, and that's obviously going to be a huge issue. So self-driving cars, you're starting to see technology firms getting into this business. That's another reason why I think autonomous vehicles will eventually work out, because you have these massive firms who have a lot of money. They're heavy into new investment. These are not these old world, manufacturing firms with a lot of capital and equipment and heavy capital requirements. These are tech firms developing software. So experimental self-driving car on Silicon Valley early this week, and was moving into another lane when when the self-driving car from Google cut it off, moving into the same lane. They insist it wasn't truly a near miss, but was instead an example of how self-driving cars can effectively avoid accidents. So you're having these tech companies comparing notes on how their software is doing. Obviously, since this article is written, we've had that one death with the autonomous vehicle, and so you'll probably see more articles talking about, these articles that you have here are essentially focusing on how safe these cars are. You're starting to see some more articles talking about some of the mishaps we've seen with some of these autonomous vehicles. Self-driving cars are allowed on streets in California, but they are required to have a human driver. Obviously, that doesn't help much if you have to hire someone behind the wheel to be able to take over. It doesn't help you with productivity because you're still having to pay attention. Google has driven the cars more than 1 million miles. It says it's had 1.2 accidents. That number has come up. Most occurred, the humorous thing about back when this article was written, 12 accidents, but most were because it was hit by a car with a driver, so it was someone else's fault. The Google car stopped and the person behind them didn't stop. And that's what this next article is about. So you can see a lot of insurance issues here. I'll skip this last article. There's a lot here. One of the issues you'll find with driverless cars is who's liable, who's going to take this risk. So if Uber's doing this, is Uber the one that needs to buy insurance for the cars that they lease out? Is it the software company? Is it whoever developed the software, whether it's Tesla or Google or whoever? Are they the one that needs to buy insurance in case this happens, an accident happens? If you own your own driverless car and there's an accident, are you liable, or again, is the person who developed the software? Since you're not actually driving, how can you be liable if your car causes an accident? Or even better yet, you don't own a car at all and you're leasing out. Let's say you're in a car, an autonomous vehicle, and there's an accident and you're injured. Whom do you sue? Do you sue the person who built the autonomous car, or do you sue the person who developed the software? There's a lot of issues that haven't been worked out yet. Who are these insurance companies that are going to insure them? Or is it going to be an entire new industry of insurance companies? Are the existing players going to simply merge and shrink and take care of this? I've heard even Google and some others saying that they'd be willing to insure their own software because they're so confident in it, so that they actually get into the insurance business and actually insure these risks. So yeah, those are the issues we're looking into. It gives you plenty to write about as a second paper. I'm excited about it. I think it can be an amazing thing, especially at my age, because I'm 10, 15, 20 years, maybe 30 years away from being a dangerous driver because of age. That it'd be really, really nice if I don't have to own a car, don't have to maintain it, and I can trust someone else, especially a computer, to drive me. So it's a very, very interesting topic. All right. One last thing I want to talk about related to commercial insurance is what's going on with the COVID-19, the coronavirus, and what's that meaning for the insurance industry. A couple of students, 2 or 3 students, are doing papers on this issue, and I've seen a few articles. This is one I saw from the Wall Street Journal. It says it's from Reuters, but I actually got it from Wall Street Journal, and so I copied it and pasted it in here. I've sent this to the few people who are doing their article on this topic. So if you decide to do this topic, I can send you this article. But the entity that I help with their insurance, I asked them about this issue. They called their insurance company and they said, no, we're not going to cover anything. But now there's pressure. They're actually telling us to file a claim. I might have talked about that last session. I can't remember. But there's political pressure to cover claims that are losing revenue. Again, this is business interruption insurance, losing revenue because of the corona shutdown. So usually this insurance does not cover anything related to pandemics, but the issue here is these firms are being ordered by state and local governments to shut down. So they don't have a pandemic, they're being ordered to shut down. So insurers have begun rejecting claims, but it depends. This is very much what we talk about with the storm surge. If legislators or if courts reinterpret these contracts, just like what we saw with the mold and with the storm surge, and insurance companies have to cover it, what will they do for the pricing of this insurance? Will it become incredibly unaffordable? Do insurance companies just get out of the business? So you have this issue all over the country. So California ordered shutdowns, and suddenly he's losing all this money. It sounds like an insurable loss. It's such a huge loss. It's happened all at once. So revenue due to business interruption usually excludes pandemics, requires physical damage on the premises, or at least physical damage to get access to the premise, even if it's not on the premise itself. So a road or a bridge is damaged. So you're seeing other states. Some people have sent an article from New Jersey on what's going on in that state. Insurers mightn't seek reimbursement from states because of what's going on here. So who knows how all this is going to work out. The regulators are asking for information, and so you just see it's definitely a risk for the insurance industry. This is commercial insurance, so the big personal lines like State Farm and USAA and Allstate won't care about this because that's not a business that they're in. Some regulators and some legislators have said, well, we'll reinterpret these contracts, these policies, but only for smaller employees. We won't do it for larger employees, but for smaller ones. So people are starting to ask these questions. It'd be interesting to follow this. I think there's enough out there to make this a paper 2 topic because it's really, really topical right now. And all of the articles be really, really recent. I'm not sure I've seen any articles on this topic before. One thing to be really aware of here is we talked about this, remember, with Warren Buffett in that paper 1. He talked about the aggregation of losses. So you can't have one event that causes massive losses throughout the entire country. So that's why flood's not covered. It's the fear with hurricanes. It's the fear with terrorism events. Can they aggregate so you have large losses? So that issue applies to COVID-19 and business disruption, business interruption. This is something that's affecting the entire country. If insurers are required to cover this because everyone's experiencing this at the exact same time, it's not like a tornado or an earthquake that affects just one part of the country at a time, or even a hurricane that might affect, a couple of states at the same time. We're talking something that's affecting the entire country. And if you have some of the global insurance companies that's affecting the entire world, can they even afford this and not go insolvent trying to cover it? So it's an interesting topic. So what we'll do next is we'll move into a couple of new topics, getting into pricing, some other more actual type of topics. But we've now walked through all of the main products of the insurance industry, from personal lines like auto and homeowners to commercial lines, including this business interruption, workers' comp. So you've gotten a good sense of what this industry covers. One thing we haven't covered, which I think I'll talk about in the next session, somewhat a pet peeve of mine, is title insurance. That's one other. I'm not going to talk farm insurance. That's just an insurance I don't know much about. If you're interested in that, you can certainly research it. But I think next session I'll spend a little bit of time on title insurance, and then we'll get into the actual side of the class.